The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organisation mentioned in this podcast.
Welcome to Talking Tech from Progressive with George O'Connor and myself, Ian Robertson, the podcast where we talk about the UK small and mid-cap listed tech market and try and bring some facts and understanding to bear. George, good to see you. I hear you've been away to Holy Island. Anything you want to confess?
Ian, you know me well enough to know there's lots that I have to confess, but I'm keeping it under wraps. Ian, do you know that there are only 50 shopping days till Christmas?
Oh, what will I do for the next 49?
However, I would really prefer to look back rather than look forwards. I have a bone to pick with you. Ian, we were happy as Larry 2 weeks ago discussing AgenticAI, and you took a swing at the rampant interest in it, arguing that the lack of orchestration tools might make this part of the whole bubble deflating area as we look around to think, well, what are the catalysts for any kind of deflation? What a baddie you are. Since then, the analysts at Forrester have picked up on that ball. What they're saying now is that next year, 40% of agentic AI projects will be cancelled. You have a fan there. The only point then is that they sort of spoil the argument by talking about the slowdown in deployment and the cooling of the AI boom is going to be due to the growing disconnect between vendor promises and actual business results. I mean, when was that ever not the case in the tech sector? Otherwise, the bubble continues to inflate. It's all going really well. We've seen in the last week, OpenAI sign another partnership with Broadcom. This time it's 10 gigawatts of custom AI accelerator hardware. There was another deal with Microsoft. As you know, Microsoft owns a quarter of OpenAI. Then they went on to purchase 6 gigawatts of chips from AMD. Was at the same time, NVIDIA disclosed a small 100 billion investment in OpenAI, plus a letter of intent to supply an additional 10 gigawatts of AI compute. So the bubble, it just keeps inflating. As I was hanging around the industry analysts, I thought I'd have a quick look at Gartner to see what the latest thoughts were there. Now, they've revised their IT spending expectations for this year. Unsurprisingly, they're up. They're talking about 9.8% spending growth in 2026. And that's from 10% growth in 2025. The industry they see is then going to hit, for the first time, so ring the bell, US $6 trillion of spend. Now, the problem with that, Ian, is that you're going to think, what is that all? That's only
single figures.
Only 1 billion bigger than NVIDIA's market cap. Go figure. But at the same time, Gartner is talking about lots of growth on the data center side. So we are seeing that also changing the shape of the nature of spend in terms of the tech industry. They're looking at 46%, which is a gobsmacking growth in that area. In terms of other points coming out of them, they are saying that Q3 is starting to improve sequentially. You will recall from Q2, there's a bit of a pause on corporate spend that's starting to warm. So then looking for evidence of that, we don't need to go very far because Palantir popped out their latest quarter. Ian, it was massive.
But this is a scaling business.
It is a scaling business. It's a massive scaling business. The numbers do the talking. US revenue grew 77%. How's that? For me, though, I was really interested in NRR, the renewal rate. That was at 134%, up from 128% sequentially, but up from 118.
Unheard of figures, isn't it, really?
Absolutely, it's unheard of. But worse, it goes against the grain of the wider SaaS industry, where NNR has been cooling and really fueling this debate about AI's ability to replicate at scale, but also at far cheaper economics. the underlying functionality across this SaaS industry. Anyway, so for the SaaS wider industry, NNR there is 111%, and it's flatlined through this year as it fell over the last 2 years. So amazing to see the Palantir number there. Great to see some proper numbers really sort of supporting all of the hype in there that customers love it.
It does circle back to the what does Palantir do and how much is it dependent upon people and finding the right people.
Great point. I mean, in fairness, like so many companies, you grow on bespoking stuff and then you go from bespoking to productize it. Where they made a big difference, I think, is really around go-to-market and their ability to get into some really interesting US DoD contracts. And then from that, then exported that. So you find them in the UK doing stuff with borders. But what they've successfully done then is got into the NHS. So if you remember track and trace from COVID, they were heavily involved in that as well. But one of the surprises from the hero of the hour, Alex Karp, his commentary, we are still at the very start of things. This remains the beginning, the first moment of the first chapter. And I think in that, he's not saying, hey, we did $1.25 billion in terms of revenue, but it's really around how the industry is changing in terms of the next tech wave on AI. That said, I think you were off seeing Trainline, where the discussion had an element of AI in there. Please tell on.
Yes, a few references to AI during this. I mean, the big thing about Trainline is the Great British Railways and what the hell is happening with that. There is a good growth story behind this business in terms of delivering more services to ticket buyers. And as railways get more complicated and you have competition between train operating companies in other countries, there are things that they can add in. So there's always a nice growth story for this business, albeit perhaps not that sexy technology-wise, because a lot of what this company does in a very sort of tech cynic way is taking APIs and just joining them up. All we're doing is taking, how do I connect to this system? How do I connect to that ticketing system? How do I connect to this payment system, this train information system as to where the trains are on the line? It's just a lot of plugging in. The actual product itself is not that complicated. The challenge for this business is to keep control of it and to keep up with the politics and the chaos around themselves, which, to be fair, they've done a pretty decent job of. But one of the things coming out of the call earlier on today was the references to AI and how that is affecting the business. And it's clear that it's making a difference in 3 different ways. The management referred to, first of all, on the product side of things. If you're sitting on a train, for example, and you've got a problem, AI is fantastic for going in and saying, well, this is where you are, this is where you should be, this is the terms of your ticket, you can get off here, you can't get off here.
I mean, that's a total victory for transparency. If they can do that, that's amazing.
It's not just about buying your ticket at the start and hoping you get there. It's about helping you along the way. And there are many, many ways in which they can help customers because they've got this huge information database where people travel and what's available and what the pricings are at various points in time and who can do what for you. And also they can tie into other applications in other markets because you'll be going to a train station, you could be hiring something, you want to hire a car, here's your car suggestion. So there's a huge amount for this business coming out of AI, but there are also going to be some challenges. The one that sort of struck me is the fact that, as I go back, it's just a lot of APIs. You could technically sit in front of your model and say, build me a system that plugs this API into this API, into this API, into this API, into that API. Here's my basic transaction structure. Here's my informational flow.
Sorry, Ian, you've just given more clarity in terms of what the entire fintech industry is doing than anything I've written anywhere.
It's just joining the dots. And so there is this big issue. Can you stand up to that if someone decides to do this? And I think they're quite confident that, yeah, okay, we've done that. It was a complete pain for them to do that. And it's going to be easier for anybody else to replicate. But they've got huge moats in terms of the market share and market position, because we all know that you just go straight to Trainline. If you're not going to go to your local operator, if you can even remember who your local operator is in the first place, you do go to Trainline. They've got great sort of weight in the market. But they've also got the fact that everybody knows who they are. Everybody respects them. Everyone knows how they're going to behave. Everybody trusts them in terms of financing. They know they're going to get paid. Maybe they've got bond payments cash held, as it were, things to ensure that they're part of the system. And, well, actually, this business, is it really that worthwhile trying to replicate it? I don't think it is, which sort of drags back to the fund management question of this business is just so damn complicated. How do you get a fund manager to get their head around it and think, oh, I've got 50% upside? Can my time be better spent elsewhere? Which is, I think, something that companies forget about.
There are also new guys on the block. So there's this little company called SETfrog. Now, what they're doing is enabling you to book a ticket, but the point of difference is upgrading. And really, it's a tool so that the train operators can better manage train capacity utilization. Now, apparently, UK train capacity utilization is a handsome 17%. If you'd say anything they can do there, you'll find train operators are interested. The CEO founder of the company, Ian Griffin, his idea came from airlines, but discovered he just couldn't do it in the airline industry, approached Virgin Rail, asked if they could do upgrades for rail tickets, explained how the technology could make it happen. And Ian, in fairness, as you've said, it's not that difficult. So the lights came on at Virgin Rail, the whistle went toot toot, and off he goes. Today he's serving 1.5 million of passengers, woefully doesn't advertise, relies on word of mouth. And so I was struck when you said brand leadership is Trainline, and it is correct. Everyone knows the Trainline. And then you said, well, not only that, but everyone trusts the Trainline process. So I will get my refund. I will be able to buy the ticket. The ticket will be accepted. So someone like a SETfrog has huge amount of work to do on that front. But in terms of the technology, yes, it is there to allow other people to get on board.
One of the things is sort of going back to where's the opportunity for other things, the other features of improving the service from Trainline. A lot of things they say like, oh, yes, we're going to have passenger information as to where are the trains ahead of you, behind you, are you late? What's the chances of your train being cancelled? That kind of information has been kicking around for years within the system. It's just, can I get this into my product? Am I allowed to get it into my product?
I mean, that would be a super transparency, innovation, customer experience uptick. Do they have any interest in doing it? I.e., can they monetize it?
Well, you're monetizing it and you're just using it, maybe monetizing it marginally. You're just keeping your customers. You're providing a better service.
Yes. Speaking of customers, there's a job in continuity somewhere for me. Dotdigital, they had a print this week. They're also in customers.
They are very much into customers.
What do you think of the numbers there? Boom, boom. Revenue up 6%. Didn't have the crowds rocking in the aisles, I would have thought.
Crowds are still comfortable. They're not running away.
Yeah.
It's one of those businesses, you look at the UK space, you think, this is a nice business. You look internationally, you just think a bit frustrated. And that was one of the things coming out of the meeting and also previous conversations we've had about this company. How much should you be spending on marketing? How should you be driving growth? And should you, as an international company, be pushing a little bit harder than perhaps the UK fund managers might find acceptable? Or maybe the fund managers should be pushing them for a bit more. It just feels that when you have competitors that are growing sort of 30-odd%, you should be doing a little bit more than that. And to be fair, they have a base in the sort of European market. That's a slower growing market. They have an opportunity in the US and they are growing at good double-digit figures in the US.
Yes, it was 20% growth from North America and APAC. So they're not slackers. But I take your point on it should be more just given the competitive nature. And that said, for me, one of the things I like is their capital allocation isn't just about buying back their own shares.
Well, they don't. It was quite blunt about that. It was, we have these opportunities. These businesses are out there. We can make acquisitions as they have with Social Snowball.
Yes, Social Snowball and Fresh Reliance from last year. So they're adding new areas in terms of the underlying product. So Social gave them influencer, affiliate, referral, a little bit of Halo, pixie dust for the TikTok generation. So that has to be a positive on a product, whereas you look through it still says SMS marketing. So I like that. But that reminded me, we had Advanced. Do you look at Advanced AdvT at all, Ian?
I doubt it. I know it's going to be this acquisition-driven Vin Maria, Blockbuster.
Yes. Do we need to say anything more? I think you've captured the entire investment case.
I think everyone's ticked the box and then thought, hold on, it hasn't done it yet.
I mean, she's made some. I mean, she hasn't been slacking on this one. She had interim results this week, good growth in revenue. So it was 28% revenue. But as you said, it is an acquisition vehicle, but 10% organic. So not slacking. Also, in terms of the adjusted EBITDA, that was up 76%. But over half of that was tied to the underlying organic business. Vin has 97 million of cash. Now, in terms of her two M&As that she's bought in the recent past, she's spending less than 10 million. So she has loads of firepower. And I believe, going back to the Dotdigital point, no shortage of opportunities. Where I came unstuck is that in her commentary, Vin said, over the longer term, we see opportunities for organic growth, particularly in AI, automation, and SaaS offerings. I think, well, hang on, just buy all of those now. Don't wait for the longer term. The market is yours. Vin, go for it.
To what extent is this going to be I'm just going to buy a bundle of companies and kick them up the backside and get them working in a sort of Vin Maria way? Or am I talking about a slightly more strategic, coordinated business?
I think you were right first time. It creates shareholder value.
It does. And it sort of does contrast with our friends over at Dotdigital, because much as you can criticize companies, people do like to criticize companies for just going around buying things.
Yeah.
Dotdigital does bring everything back to a platform because it is trying to sell off a platform.
That is a super point, Ian.
And that is in marked contrast to certain companies that we could mention, like GB Group. I've got a technology, and if I tell a fund manager I'm buying it in a technology area like cyber, I'll buy it wherever and whenever I like, and we'll sort out the hat putting it together later on.
I mean, I do like the new CEO for recognizing the fault line that you've just described. And I think he is trying to fix it.
Yeah, they're fundamentally aware of what they're doing, those guys.
I'm not sure the previous team were, but he knows. I was put off, though, by his move from AIM to Main. I don't get that part. There's still a lot of fixing to do he's got there. But anyway, can I sort of take you away from all of that? You spent, was it yesterday, seeing spin-offs in universities?
Yes, I went to the SETsquared Investment Futures event. Now, SETsquared, it's a partnership between the universities of Bath, Bristol, Cardiff, Exeter, Southampton and Surrey to say, this is sort of IP, these are our spin-off, this is what we're trying to build an ecosystem, much in the way that we see it in Oxford and Cambridge, and to a lesser but still very significant extent at Imperial and London. They have worked together to sort of create common standards of how we do things, how can we promote, how can we work with the VCs, how can we educate our potential spin-off businesses. And they were doing a presentation yesterday of a number of their leading companies in London.
Oh, right.
So it was attended by VCs, advisors, the usual hoi polloi, shall we say, that people are interested in this space and want to put money in or want to earn money out of it in some way. But it was very positive, very encouraging.
Yeah.
There is clearly an awful lot going on in the university spin-off space. The universities are making good progress in what they're doing. They're also being very aware of where the problems are. And it was good to see what was effectively an ecosystem almost presenting yesterday. People saying, well, we've got to fix this. We've got to fix that. The onus is upon us to fix this. Notably looking at the whole scale-up area, because there is plenty of money at the SEIS, EIS stage where you're doing your seeds, your first 500 grand, 250 grand, million, 2 million. But beyond that, it starts to get a bit more difficult.
Have they got sort of mind share or ear time with sort of more mainstream EIS institutional investors? Or are they sort of saying, whoa, too early for me?
They do have mainstream EIS, SEIS exposure because there are a host of smaller venture cap funds that work in this space and angels and angel networks, all hovering around, moving around. So it is a working ecosystem. It is a little bit chaotic. It is a little bit uncertain. You also have the whole Innovate UK pushing from the outside, and of course, British Business Bank. And although I think Innovate UK get a bit of stick for looking like they're just funding development, but they're not. They're trying to create businesses. What they try and fund is things that are going to be a business. A lot of their money goes into just do some market research to find out if this works.
And the other sad fact which you identified is 80% of early stage investors are based in London.
Yes, that was a key point, and it's something that everybody is aware of, but everybody is trying to deal with, and the ecosystem is trying to deal with it, which I find, looking across to the public equity markets, is something of a stark contrast, because the public equity market solution is we want a bailout.
I'm not listening, carry on.
What was even more bizarre for me was that the best session that I attended was actually being run by someone from the London Stock Exchange, talking about the ecosystem and where people can get finance from. And they didn't have to be there almost. They're not flogging the IPO process. They were quite definitely not flogging the IPO process. And even Pisces only got a sort of mention at the end. But it's interesting to see that everybody in that market can work together and wants to work together, from the banks to the VCs to the EIS to the universities.
And the feeling amongst the entrepreneurs and founders, are they just being dragged along saying, here, do this, it'll be good for you, take the medicine? Are they thinking that long-term enough is really my point?
These events, they're always a certain Tigger-like enthusiasm, isn't there? Because of what it is, and in fact, you've been selected to go and present. There was frustration at what's going on at a higher level, but there was the attitude also of, well, we've just got to keep going. We can improve ourselves, we can do better things ourselves, but we've just got to get on with it. And to a certain extent, maybe there is a lot to be learned for the public markets to be, oh, look, entrepreneurs, this is what the entrepreneurs are doing, this is what these people are doing. I don't see anything particularly entrepreneurial about asking for a bailout.
That said, I'm guessing HSBC Innovation Bank was there.
Yes.
They produced a big new report which came across my desk yesterday on the 50 best exits of 2025, pointing to how do we manage your wealth once you've sold.
Well, fair enough.
On that bombshell, Ian, how lovely to chat. We're still in the weeds on Q3 reporting, still trying to pull it together, but there is a definite sense of not as bad as Q2. I hope you're getting that as well.
I think the world is progressing, but just a little bit frustrated, shall we say.
Yeah, absolutely. Very, very good. Anyway, 50 days left for Christmas. Time to get shopping.
I better go now.
Brought to you by Progressive Equity.